Thank you so much. Just to give you a bit of an idea, I'll be your host for the evening. I landed as an immigrant in 2004. It's been a long time. And interestingly enough, I only had one job in this profession with one accounting firm for the last 15 years. That's where I built my entire career in Canada. Spent 15 years in public practice, particularly in Canada, but also in the US for a couple of years before moving to Canada. And I was fortunate enough to serve as a partner, particularly in the audit practice. This particular decision when I left the firm led to the birth of Countable. So it was a new direction. In 2018, we literally just started it. 2019, Countable started the first line of code. And we launched Countable in Canada in 2021, and then we expanded to the US in 2020. We've been growing very nicely for the last 3 years since we've launched, easily over 150 to 200%, thanks to everyone who just came in for a journey. It was definitely an exciting and a very humbling journey. We just recently got the Smart Business App of the Year award by Xero. We won the Emerging App last year. It just simply echoes how Xero is continue to promote and provide value to early stage entrepreneurs when it comes to trying solving complex problems. So we do feel that Xero has been an amazing partner for us in our journey. From Countable's perspective, the mission is actually very simple. We're here to help accounting firms run smoother and save time with smart, innovative tools. So how hectic things can get, we're all about making your day-to-day easier, giving you more time, focus on what really matters, growing your practice, spending time with the clients, or just catching a breath. I know how important that is. At the end of the day, we want to be a partner in your success, helping you build a stronger, sustainable future. When it comes to our vision, it might sound a bit ambitious, but that's because it is. We are here to lead a global transformation by making AI-driven solutions accessible to everyone, no matter what the size of the firm is. We know the change can be tough, but it's not always easy. But that's okay. We're committed to bringing advanced technologies, and this is why we are here to be able to see how we can bring this vision to reality. So we're going to dive right into a panel discussion. Before we go into what would it take to drive an AI-driven engagement, let's talk about what is the current state of the year-end engagement looks like for us. So for that, let me just start thinking a little bit and put you guys in that mindset. So let's start with something we've always struggled with, at least I did. What's your biggest challenge with year-end engagement? So if I can have the chat with the audience, just putting in 1 word, 2 words, whatever comes to mind in your chat. So everybody in that room starts to feel what's working, what's not working, right? I've spent 15 years in industry and I know how tough it is. These are not easy solutions, but together we have close to about 85 different firms. We might be able to actually find something that works or at least help each other. So please, whether it's long hours, whether it's juggling with tasks, practice management, billing, working papers, whatever is on your top of your mind when it comes to year-end engagements, think about it, put it in the chat, please. Let's keep that rolling. Then what's one thing you wish you had more time for? And this is also something really, really close to my heart. For a lot of different things, we always say as accountants don't have time. It's not that we don't have time. Like I include myself as an accountant. It's not that I don't have time, but it's more around, the time is so spread out that it's almost impossible for us to be able to do. So what is one thing that you think related to year-end engagements that you think you had more time for? And finally, for one thing, what changes are you hesitant to make? What are some of the things that you absolutely don't want to make, but you think you need it for sure? Again, use it however you want to use it. This panel, this platform is for you guys to be able to have that conversation. And hopefully we can get some answers before you leave today. What you see on your screen, it's filled with a lot of words, representing many challenges we face. Maybe a few of those resonate with you, maybe not. Or maybe just one stands out. Resources, fear, data security, training, automation, could be anything. We wanted to find those answers for you guys to see what that would look like. What is it that's working? What is it that's not working? Let's dive in. So I'm gonna introduce my panelists. The first one is Josh. As you know, LiveCA has been a pioneer in building their first virtual CPA firm a long time ago. I used to be a partner at a firm, and I was like, wow, what a great idea to build an online firm way before anybody started doing it. So the echo goes to Josh and Chad to be able to build this out. They've been instrumental in integrating cloud-based solutions, making LiveCA a leader. Josh regularly speaks at the industry events, sharing his insights on technology, very strong advocate of cloud technology. We have had a number of conversations in the past about implementing certain process-related solutions, and he's very heavily focused on talent. A fun fact about him is climbing or already climbed 7 summits. We need to check with him because I think I missed that out. And we just want to make sure that I got the facts right.
Have not climbed the 7
You
summits
have
yet.
not
On my way.
Okay. Next is Chris. So Chris holds an MBA and is a certified financial planner, brings a comprehensive approach to his clients' financial needs. Also a US enrolled agent. Chris is absolutely equipped to handle complex tax matters. I think they specialize on both sides of the border, the Canada and US side. Niagara-based, I recently get to know Chris and Mark a little bit more closely at the ZeroCon, and I truly appreciated every minute that we spent. I do believe that both of these guys are somewhat of a marketing guru. And somebody switched on a poll, it looks like. So somebody of a marketing guru and the tech-driven accounting innovator. We worked with Chris and Mark for over a year now, and I think it's been absolutely fun. Now, again, fun fact, it could be wrong, but he runs and he climbs mountains for fun, and I'll let him clarify that in case I got it wrong.
I think we're doing aspirational fun facts today. Let's see.
Okay, we'll go with that. Matt, and again, Matt and I have known each other for quite some time. Started True North Accounting based out of Calgary, left a Big Four to start his own practice, grew the firm from 4 to 24 members. Absolutely an amazing person to connect. Vast network of contacts within Calgary, helping business owners with the right people, right resources to help grow their businesses. So very heavy, a very strong advocate for integrating technology into accounting practices, but also just taking a leap in trying new tools. Beyond his role, Matt actively mentors new entrepreneurs, offer guidance on everything on financial management and business strategy. Now, fun fact, I picked it up because he lives close to Calgary. I figured the hiking and trekking has to be one of the things that is on his plate. Whether he can actually find the time or not, that's something I still need to figure it out.
Yeah, sometimes I wouldn't choose to do those activities if golf was an option, but yeah, hiking's fun, I guess.
That's fine. And then the last one, before we call everybody in, we want to dive into today's discussion. We want this to be as interactive as possible. Your insights and questions are a huge part of what makes the session valuable. So please, a couple of things. Do drop questions in the Zoom Q&A box. This is absolutely critical because we'll get those questions in and we'll take it on as we go, maybe at the end or maybe after every round. We're having expected 2 to 3 rounds, primarily focused on year-end engagements. And then keep the conversation going in the chat, because it's not just 3 panelists. We have another 80 firms. So it's 83 different panelists, all as a roundtable conference. So I understand we cannot switch on the videos, but your chat and the Q&A should provide you all the information that you're looking for. So Josh, first one is for you. Can you share a little bit about your tech stack for the year end, what you guys use? Do you continue to evolve and change it over time? Or any major roadblocks that you want to talk about?
Yeah, so well, maybe I'll work backwards. So, books to tax, right? So our firm today just works with Xero and QBO. We don't work with any other platforms right now. So you would go from books to tax, it'd be either from Xero to QBO, transition that data. We're just talking, we don't do audits or reviews. We're just talking about compilations here. So we go from Xero QBO over to Caseware Cloud, and then from Caseware Cloud over to CCH iFirm, right, to do the tax return. So that's what we do today. That isn't, and that's, that still has a number of issues, obviously, for a whole bunch of, talk forever about the issues. Integrated system would be nice. I know Caseware Cloud is working on their own version of having tax within there. We don't love Caseware Cloud. For us, has a number of challenges for a whole bunch of reasons. It's also, there's free products that we've seen that are developed exclusively for compilations, right? All this whole other bells and whistles that you need for audits and reviews is not really applicable to us. That's part of the challenge for us in terms of choosing our actual year-end software for that. In terms of how we got there, it's over the years, and we started 12 years ago, it was using Caseware Desktop, right, like everyone else, and take a QuickBooks backup file and doing something in there, and using CaseView for financial statements, and then Profile for tax return. So I think at the end of the day, as we transition multiple times to different systems, right? There was a transition from profile to CCH. There was a transition from caseware desktop to online, et cetera. So I think each time it's when we look at our firm, we go, what's our focus? Because each transition takes a number of months, right? There's a whole lift, particularly around historical data and all that kind of stuff. So we always think through, okay, is this challenge big enough? Is it for us to switch? If so, when are we going to do that? Right. So timing wise, what's the impact if we do the switch? Right. So for example, just to say, oh, well, if you switch this particular software, your tax return will populate automatically. Well, that takes us 30 seconds or a minute or, fine. It might be a little bit of a benefit, but it's not a massive impact. On the flip side, being able to save many hours on the actual compilation or that creating the notice to reader, that actually may be significant enough, right? So we'll probably reconsider our options depending on the improvements in Caseware Cloud in another year or so.
So just to extend that question, so all these are absolutely relevant. If all the transitions that you've done in the, let's say, last 5 years, which one was the most difficult? Which one is the easiest for you? And why?
I mean, at the end of the day, I don't know if it's like apples to oranges. Each challenge comes with its own, or each transition comes with its own set of challenges. It also depends on the size of firm you are and the resources that you have, right? So certainly being a bigger firm with more people that are specialized or dedicated to actually leading the transition is easier. Right. Even for example, when we transitioned from what used to be Workflow Max, which was Xero's job management platform, we transitioned to Carbon. That's a massive lift, and you have to recreate all these jobs in a new system. But we had someone dedicated to doing that. Right. So going from Caseware Desktop to Caseware Cloud was certainly a big lift. But I mean, Caseware Desktop, to try to run that in a remote environment, had so many tech issues. Because we were using Dropbox, and just the way that the Caseware for using Caseware Desktop, you double click on a file and it expands 100 files. And so if you're trying to run that on some sort of server, you get all kinds of you get all these discrepancies as the file tries to save itself over each other and then compress at the end. So we had so many corrupt files. So all this to say that, yeah, it wasn't a great transition, but when we did that, it saved so many support hours.
Josh, this is really helpful. I do appreciate this. And I've lived it personally myself, so I can echo some of that. Chris and Matt, do you guys want to add something to it, or you kind of agree, or you have something else that you want to share on top?
I'm just curious, does CCH have their engagement app ready, available in Canada yet? They've been talking about that for a long time, and just wondering if you guys have tried that, Josh.
I'm not sure. I don't know what it's in development, but no, which one are you referring to?
I thought they were making a working papers called Engagement in iFirm, but maybe that.
I can speak to that because one of our clients, we transitioned over from CCH. I think they've done an early review of a cloud CCH engagement module, and I think what I've heard is that they're probably about a year away from having something on the cloud.
Okay.
But they do have a desktop version that's been around for quite some time, right? So that's sorry, Matt, did you have any other thoughts that you want to add on the tech stack? What do you guys use and any challenges that you want to add to it?
Yeah, very similar tech stack with Ignition and Carbon. Xero is what we've used for almost 10 years exclusively, but we're starting to work with QBO a bit more too. But yeah, all those, the Carbon and the Ignition, setting up the templates and the terms, and if you don't get it right, you have to go and if you upload or you implement it with all these clients and then you have to change something, that can be a challenge for sure. Yeah. Kind of defeating.
Chris, any thoughts on your side?
So I can add to that in terms of the tax stack. So we're using TaxCycle. It integrates fairly well with Xero. We also tend to use HubDoc, partly because it's included with Xero for document management and books. Not sure if it's too early to disclose this or not, but we're a Countable customer, so we use Countable for all of our notice to reader engagements. So the theme here is just to integration, right? You're really looking to try to chain everything together from end to end as much as possible to try to create that smooth data process.
Got it. So I heard something about the lift. I think that's a big thing, and it's generally comes into change management, transitions. What do you look for? Whether you have the resources or not, all these things really start to kick in when we look at lift. So I think there was a valid question. What do you mean by lift? And what is it something that firms should start looking at it? If you're picking up one example and said, hey, every lift is somewhat similar. It takes a few months if I get it right, sometimes longer, depending on what you do for year-end engagements. What is it that you recommend that at minimum people should have before they want to decide to take a lift? Because we're talking about people where you are able to afford somebody to have it do it for you, but where you can't, how would they really choose, and how do they really go about making that transition?
Look, I mean, you can. What we studied in all our, the CPA courses, which is like how to do this proper lift and running parallel systems. Like, let's be honest, a lot of us have started as sole practitioners as well, and you do the lift yourself, right? So when you decide when in a tech stack, like you're doing it. And so I don't think the lift has to necessarily be that complicated. In fact, it gets more complicated as your firm grows and you have more customers. So for sure. But again, I'm assuming as your firm grows and have more customers, you've got more people to do it. So I think it really it depends. If you're a sole practitioner with 50 people and you're going from a desktop profile to online CCH, I don't think there's a big lift. They actually make it really easy to import different files. So there's not a whole big lift there. If you're going from caseware desktop to something like Countable, maybe that's a bigger lift because all of a sudden you've got to redo all your FS templates, right? And actually now you've got double the time for your next year engagement. So the lift is less about installing the software, but more about on each subsequent engagement that you do. So I think you actually have to look at each one in isolation, a case-by-case basis.
Got it. I'm going to move on to Chris. It's a different question. Just switching gears to clients. When it comes to clients, and this is what used to happen with me back in the days when I was a partner, is like we would just tell the client this is what we want it to be. But most of the time I hear from folks, client is hesitant to move their data to the cloud. I don't want to do the transition. I like my desktop the way I like it and everything. Like, what justifies to not have a cloud adoption for a client? And what are some of the challenges that you've seen happen?
Right. So the first thing that I would say about this is, not every single client is going to be a good fit. So if someone really, really doesn't want to do it, or they're not even capable of doing it, perhaps they're a little too low on the technology spectrum themselves to really make this practical. There's a certain client type, we'll say, that just wouldn't be suitable for this. And if you try to force them to do it, they'll have a bad experience and you'll have a bad experience. So part of the new client adoption protocols is actually interviewing and vetting out who you think is a good fit for your services. Because if this is what you want to operate, then you start looking at ideal client types and you start organizing your entire book of business around that. You organize your staff training around that, your business processes, your tech staff, and also your marketing. So that way you're attracting the ones that you hope are a good fit for this. With transitioning, so let's say you have a brick and mortar desktop-based process. A good place to start is pick out what good candidates you think would be good for this. I wouldn't transition every single person at a time. It's a lot easier if you do one at a time so you can help them with the transitions and set a bit of a longer runway to, if your goal is to, let's say, get all your clients or the vast majority onto the cloud, sort of do them one at a time or in blocks, let's say, not every single person. And so the legitimate concerns that come up that sometimes people just need a little education around are like cost sometimes is a concern because they're paying for more technology. So oftentimes we'll build that into our pricing models and so on to try to reduce that obstacle. If they're paying for the desktop software currently, or rather not paying for it because you can get away with using it for multiple years. With smaller clients, that's sometimes a concern. The other one is privacy. Some clients, again, just need some education around how that all works and who has access and where the data is kept. Some people are not familiar with what cloud-based software or data really means. And so those are legitimate concerns that come up, which can usually be overcome with a little bit of education. the sort of the third factor is, I would say, breaks down into two categories. Clients who really want to be involved and have some roles and responsibilities, and other ones that maybe don't really care what the process is. And so there are, if you're going to have them a little more involved and have to set up bank feeds and deal with banking and so on, you need to make sure that they're ready to commit to that and to get the advantages that all of this provides. And so essentially, like, our client onboarding process involves a lot of explaining how things are going to work, how making sure they understand what we're going to need from them in terms of their help to make sure that their end of all this is set up right, and then emphasizing all the advantages they're going to get as a result. And so once they're pretty well on board with that, then things tend to work pretty well. So we spend a lot of time emphasizing the advantages.
Got it. That's wonderful. I generally hear from clients, they know their business really well, but we can tell them how to run the business better in terms of when and how the advice really comes through. So I do echo the fact that if we leave it on the accounts, they will start to run the business the way you want to run it. And I always generally echo, are you an entrepreneur running an accounting business, or are you an accountant running an entrepreneurial business? Which one it is, you have to choose accordingly, and it might start to make different sense. So yeah, thank you for sharing the thoughts. Josh or Matt, anything else you want to add on the client side, if anybody wants to share some thoughts?
I mean, it's just I'd probably echo Matt's sentiment around it's not right for everybody. So I think there's the idea of how to transition someone from desktop to online. Fair enough, and doing it one by one, giving attention. So certainly in agreement with that. And I think Matt mentioned as well, like for us, it's don't fix it if it's not broken, right? So if a client says, I don't know if I want to go online, well, don't. If there's no, if the person doesn't see a lot of benefit, then we don't push. We've been 12 years ago, or when we started, and that is the approach that we took. No, online is better. We switched people online, and some got really mad and they wanted to switch back. So today we don't, if someone's in that mentality of concern, I don't really want to switch. We're not in the business of convincing someone that the internet is a good thing. They have to, I think, make that transition on their own. And once they understand what it is, okay, then you can hold their hand and do it in a way that's slow and steady for them, so they're comfortable with the process. But I think that first step actually needs to be client driven.
Yeah, that's wonderful. Matt, over to you. Thank you, Josh. Matt, over to you. Just a different, maybe switching gears back into the third element of the year-end engagement, which is team. Right? We hear that a lot, where team is like, I'm not ready for this. You're taking this away from me. You're asking me to change all of a sudden. So what are some of the things that you start to look at from a change perspective, where team onboarding or team's acceptance towards adopting new technologies also comes into play? And what are some of the challenges that you've seen and overcome?
Yeah, I think like so many challenges, and we've made every sort of mistake with change management, and
yeah,
I've driven my team nuts for ever since we started in 2015. Like just like that continuous improvement curve is what it looks like in my head, and it sounds very different when I'm talking to them about it. But like I bought a practice in 2015. It was very paper based. It had a work paper app that ran on DOS, and it was streamlined, but I couldn't buy computers that ran that software. And one of my good friends runs an MSP company here, like a IT company. And right from the beginning, he was a huge resource helping me evaluate the options in the market for each function and how to evaluate those needs. And so I like working with him in sort of that capacity really helped me get convicted on what is the right move and what's necessary. And and then the trick is to persuade and convince accountants that it's worth the challenge and the headache, and it's going to save them time.
I always hear, just to further that question, is like, I always hear people like, this is new software. I don't even know if it's going to survive or not. Like, why are you using this? So at what point in time, when you've looked into newer technologies, at what point in time you start to engage and where it makes sense? Because everything that we use, it's all based on stability, security, perfection, so many different ways that come. So it's a legitimate question and concern from, as an entrepreneur, I'm always curious to see, hey, at what point in time it starts to make sense for you guys to look at it?
Yeah, like I would normally start with the client like experience and what they're asking for, what our current process is lacking, and yeah, what is the experience we want our clients to have? That's kind of where I would start, and then go into like, okay, what's the experience our team wants to have, and how is this gonna fit nicely into our onboarding process or year-end kickoff process, and yeah, just evaluating all those pieces and see if it makes sense and what the trade-offs are. But yeah, and when it comes to different like team members' perspective on a new app, I think this last few years has been really interesting finding bookkeepers, for example. That's a big part of our business, is doing the bookkeeping. And you can find somebody that knows software and knows how to use the apps, or maybe they're from a younger generation and they can figure it out. It's kind of second nature to them. And then you can have a bookkeeper with 25 years experience that knows how to crush a file start to finish very quickly, and they can identify issues and solve problems and all that, but they aren't as tech forward, or it's not as natural to them. And so if you can convert them, if you can make believers out of those types of team members, then it should be easy after that. But yeah, it's that kind of old school traditional bookkeeping where like it needs to make sense in your head, versus a lot of the apps kind of like QuickBooks and Xero kind of take away some of that control. And so to some people it feels like it's a black box. Like how did it get this trial balance? I didn't have to make any entries to cash, or yeah, it's just a different mindset in that whole process.
Yeah, I completely agree. I want to thank you so much for that. Matt, Josh, want to talk a little bit about the resource turnover. I keep hearing resource crunch as one of the major challenges, and I'm curious to hear whether people are actually feeling that as a pressure, or is it just happening in a certain pockets, in a certain manner. So, question back to you, Josh. Resource turnover, either before or during or after the busy season, or finding new resources, training them and getting them. Maybe there's some sort of a saying cold talent war that's going on. Can you maybe talk a little bit about that, your take on talent in general?
Yeah, I mean it's a big question, the take on talent. So I think there's a number of ways to address this. But let's first talk about. I mean, look, I know this is sort of top of mind. There's an accountant shortage. It's in the newsletters. Good talent is hard to find. Talent's expensive. There's price pressure down, and with the recession, a lot of firms are outsourcing to India and Philippines work, which further drives price pressure down. Which means you have to figure something else out to add more value to customers. So, okay, those are like macro industry trends, and so you got to figure out, okay, well, how do I mitigate that? And so that's perhaps a whole other webinar. Is what do you do in the face of those trends? But to bring it back down to something a little bit more practical, I think for firms. I remember like when I did my CPA, it was like every summer we would take longer vacations, and then sometimes we gave paid time off in September to December, and then January came around and they went, oh my God, it's tax season again. And I was like, and people start to work, 15-hour days, and they were scrambling, and I don't know how we're going to finish this year. And it was the same every year. And I always wondered, was like, well, doesn't it come every year? Isn't this something we know next year there are certain resources, but every year it was a scramble. And so, I thought, okay, well, when I start my firm, I'm going to figure this out. And we did value pricing for the first 10 years of the practice. And I know that's very much top of mind, which in terms of the literature out there for cloud accounting. We left value pricing behind, with the exception of certain types of engagements. And we now move to what's called we call a budgeted hour version. So different than the billable hour where you bill the client after the fact, we set a budget for ongoing engagements. And, you need 2 hours of this service, 3 hours of that service. Here are our rates. And that's an ongoing month-to-month engagement. And what that does allow us to do, it allows us to do really database capacity planning. And we can see, oh, we actually need this many hours from this particular team on this month. Do we have those hours? Right. And we never were able to do that before when we did value pricing, because there's always relying on the subjective assessment of individual staff members. And so today, with that actual data, we're able to not only give our employees a sustainable workday, right? And we have all kinds of other benefits. People can work from wherever they want. I'm in Argentina, that's great. But sure, you can make it a great place to work. But ultimately, I think you have to figure out how to manage capacity well in your firms, because I think a lot of firms struggle with that. And then, okay, if you have seasonality issues, like, I don't know, Disney World has, I'm sure, a busy season in the summer or something, well, you hire more people. Right. And I don't think that's that common. So perhaps you have contractors between, I don't know, February and April, if you've got a lot of personal tax, or if you've got a lot of December year ends, you do something different. So I think once you understand your capacity needs really well, then you can look and say, well, what are my options, right, for addressing that capacity? In our case, like I said, it's contractors that just so we can make sure everyone has a 40-hour week throughout the year. But you could also you work harder in tax season, and you can take a 4-day week after, or a 3-day week, or summer. There are many other strategies to address the capacity gap.
Yeah, great. Chris and Matt, anything on your side that you guys want to add on to that? It's a great insights.
So if you're hiring contractors and giving them budget hours, are you, like, say they get 5 hours on a work item or a project, are you paying them 5 hours? Pay them based on the budget hours, or do you pay them based on the actual hours or salary?
So we'll know, okay, you know what, because we have a budgeted hour key, and we know, the average time, let's say a T4 review takes on a payroll team. So we go, you know what, we're short in February and March, we're short 60 hours, something to that end. So we could then hire a contractor for those 60 hours and then pay for those hours up front. Right? Or you can pay them after for that day. But the idea is we typically know what block of hours we need for what particular service, and then we can go and look for that particular contractor. Sometimes we don't actually need the contractor. It's not that we do that for every service line, but ideally, again, we know the block of hours ahead of time for what we need for the service offering, so that we can then decide how we're going to approach it.
Yeah, that makes a lot of sense. And do you do your capacity planning in Carbon?
No.
Through their Power BI?
No, we do it on Google Sheets with our own database that we built outside of Carbon.
Thank you, guys. Chris, just a similar question. I'm even leaving it open for everybody, but predominantly to start with Chris, just from your perspective, if you want to reach a peak performance, if you feel that the firm is not there yet, and you feel that there could be a better performance matrix, whether it's resource utilization or file efficiencies, I always felt that the senior managers and managers are really the key players in this whole equation. And you remove that from the equation, they're probably the hardest to replace and bring in the expertise, the client experience, the everything else, the team camaraderie, everything else really starts to trickle at that partner and manager level. Can you maybe share some thoughts? Like, if I give you 10 new clients this week, and then I take that manager away, what are some of the challenges that you would then look at, and how do you really address that?
Sure. So the way we tend to look at it here is a bit less rigid, in the sense that what is a job? It's a series of tasks, right? So we try to distribute the tasks as widely across our firm as we can, which we're constantly training people into management roles. They may not be a manager, but they may have 1 or 2 things they're in charge of managing. And so we're constantly doing that. A lot of it's cross-training. So, for example, a simple example, someone gets sick or takes a week off or whatever. You don't want to be in a position where, only that one special manager knew how to do that thing, and now we're just sort of going to have to sit on our hands and wait for them to come back, whether it's a manager or an administrator or whoever, right? And so we spend a lot of time doing cross training. We try to use processes to simplify things down as much as we can. Some of this has to do with scoping clients and things too. If something is too custom or has too many special requests attached to it, sometimes we'll deem that that's not a good fit for us, just because, you know, we sort of have our process and we have what we're looking for and what we're interested in. So the biggest question on those 5 or 10 clients would be, do they fit into our business processes or not? If they do, then it's fairly easy, because we have people trained on onboarding to take care of our onboarding process. We have a certain system we walk through with people. You know, and the second thing I would say about that is, for anyone who is to that manager level, we try to make sure they're doing as little of those other things as possible, because as much as those senior managers have all that knowledge, oftentimes they're underutilized, you know, or they're underutilizing their time in a day. They're not really spending all their time on, you know, financial statement review and tax and really high value client ads. They're spending half their day just saying, like, do we have this? Do we have that? Did this person bring something in? Did that person bring something in? And so that can all be, really, you can hire people who are not CPAs, who are good at project management and client management and all this other stuff to handle all of that stuff. To, at least with the senior staff that you do have, you can make the absolute best use of them.
Right. Do you try to make sure that the senior managers are more client-driven and reviewing the files and not really engaging in preparing the files? Like, what is it different? How do you get like a pulse check to see who's kind of burning out, who's still there with us? Like, you know, what do you guys do around that? I'm curious.
So we do tend to pretty well cap off hours. People's schedules are really managed. I will even go as far as to say almost micromanaged. We use Monday.com. And so our office manager is regularly reviewing workflows and reallocating work, meeting with people to make sure that they're really not going over their thresholds. And if they are, that work is getting diverted off to other team members. So, you know, if somebody's working high hours, we definitely know about it. And we also take the burden of prioritizing tasks. Anyone who was sort of older school, you know, you get your workload and then you have to decide what's important or what's not. Whereas we feel that should be done at the firm level, so that the firm could choose what its priorities are and decide what comes first, what comes second. You know, this even comes into, like, you know, accepting engagements, you know, what's the client expecting in terms of turnaround time, so that we can be consistent with our turnaround times, avoiding client penalties and all this kind of stuff. So really, that's all managed at the bird's eye view, firm view. So if I have a senior person working on 45 hours worth of stuff, I know exactly what they're doing with their 45 hours.
Yeah, that's amazing. I think we are all in people business, as Starbucks CEO said once. It's like, we're all in people business, serving coffee or doing accounting or anything else. So people has to come first no matter what. Just maybe switching gears a little bit. Thank you, Chris, for that. And Matt, just a question from your perspective. Wanted to see if we talk about, you know, when you started your practice and you're just really building it out and you still don't have the office manager or the team and anything else. So how at that point in time, from that point till today, what are some of the things that you've seen that really pulled you back, and then eventually you had to overcome that hurdle to be able to improve, whether it's efficiency or scalability or resource issue? Anything that you can share in terms of lessons that really help you transition to start building a scalable model?
Yeah, the taking a manager away and just thinking through the impact of that is yeah, it's a very real thing. I'm going through it right now. And so I am back into the process of year ends, and it is good. I do feel like being, as a firm owner, kind of being an arm's length from the actual production isn't a great thing for accountability and training and yeah, getting the good metrics that a firm owner needs to make sure every team member is being productive and doing what the rest of the team is relying on them for, making sure every client is done profitably, or they're getting rid of. That is, yeah, it's a challenge. And there's different, like we talked about, or there's this, I guess, this firm accountability structure that likes the deep and narrow team. So very hierarchical, and like people focus on whether it's admin or bookkeeping or accounting and year-end prep, versus the generalists that can kind of do everything, that flat hierarchy. It's harder to, yeah, like you got to choose one of them. You can't hire a 10 generalists that can do everything. It's gonna be a lot of training, and I wish I could, but the training program and the review of metrics regularly, I think is important to keep a team cohesive and productive. But then the size of the team too, and the makeup, and that's really something that has hit hard with me, is having teams of up to 10 people, but no more. And it's headed by a CPA, and they know their clients are small enough to know every client, and nobody on the team can hide in a team that small. Ideally, like 7, 8 people, I think is great. So there's so many moving parts to that whole of becoming scalable, and I think that team structure is a big part of it, and empowering that CPA at the top to make decisions to run the firm they want to within some guardrails that we give them.
Yeah, this is a personal favorite question from my perspective. I'm going off script a little bit and just winging it. I always felt that I had to spend time going to the business development, get the clients, connect with the team, look at the technology, get into the file, come out of the file, and look at all those things. So it happens almost on a daily basis, becomes very cookie cutter, almost started to feel like machine after some time. And I'm just curious, as a partner living and breathing on a daily basis, whether you are starting in or you are where you are today, what does your typical week or a month looks like? How do you prioritize certain things when it looks at file quality versus team encouragement or business development? Like, what have you done that works really, really well from the very beginning, continues to be your top priority? Whoever wants to go first.
Yeah, I can jump in here.
No,
I mean,
go for it.
it sort of connects to more of a philosophy, I think, of what the role of a CEO is. But I will put an asterisk here. I think it really depends on the size of your practice, how much you can dedicate to this. So, I think when we spoke earlier about what can a firm do, in light of some of the trends that are happening in the industry, what can you do to actually attract really good talent to stay at your company? And I would argue that one of the main things that keeps this sort of new generation of professionals at a particular company is their ability to grow. And I don't mean just their ability to get promoted and growth in the traditional sense. I mean grow professionally and personally. I do think a lot of people are looking for purpose-driven organizations. Certainly in the tech world, there was this, the idea of visions and changing the world, which we saw the danger of thinking that, every app can change the world because that's what we want to do. And of course, that the tech ecosystem is suffering right now. But certainly there is a drive or attraction to purpose-driven organizations. And so we made a decision fairly early on to focus on what we say, it's a fluffy statement, but it actually has a practical implication, which is what our purpose statement is: high impact work and a meaningful life. Part of that means that there's a whole other life outside of work. We don't call it work-life balance. It's more of a work-life integration. In other words, you want to work on Labor Day Monday so that you can go hiking somewhere else a week later, like, cool, do what you need to do, right? So part of that is, and if I come back to the role of CEO, I look at the role of CEO as head coach. That's sort of a theory I've been working on. I have my own business coach that we've paid for the past 5 years. So very invested in my own professional development, and then learning how to apply a particular coaching system within our company so that we can consistently improve. You can call it the professional development, but it could be leadership skills, soft skills, et cetera, of our downline. Downline can be the leadership team, the managers, and have that concept flow through the organization. And so that's where I say that. So the majority of my time is focused on that one-on-one coaching. So that's everything else, like, fair enough. But if I have to identify one priority, in a week. So that's where I make the biggest impact. It's some version of coaching.
Got it. And is it fair to say that you spend more time on processes and people than actual technical work, ideally, or is it all passed on to other managers?
So we run our firm on, I think Countable does as well, functions on EOS, which is a way of operating a business. And so because of that, a lot of the work that we do for improving processes, and for those not familiar with EOS, I do recommend checking it out. Check it out online, just Google EOS worldwide or read the book Traction. But ultimately, what drives change in our firm are the L10 meetings that we do. At all departments. And what happens is an issue at the firm makes its way into an issues list. We use software called 90. In their weekly L10, we address the issue and it turns into an action item. So a lot of the process changes that we've actually have, I think a lot of firms lack the process to make process changes. And EOS is that platform that allows us to, every time anybody sees a roadblock, they add it to the issues list, we triage it on that that regular meeting. And so that's allowed us, I think we implemented EOS about 2 or 3 years ago, and that's allowed us to create a lot of little changes over time that have added up to much bigger process changes.
That's wonderful. And I echo what Josh is saying. We've implemented it and it is phenomenal. It allows you to be able to isolate pain points and root causes but it does need a certain type of size in terms of the entity. Otherwise, you end up filling the owners, every single person the same way. And that automatically tells you that you're missing owners in the company to be able to really drive the process forward, which is again in itself a good exercise to do. I want to open it up for Chris and Matt as well, because I think this is one of the things they might have a different perspective and how they're handling technical files, people, business development, everything.
I'll echo the way Josh started, which is that firm size will dictate this to some extent. And past that, your firm philosophy takes over a lot. The biggest words of wisdom I would have would be the following, which is form an idea of an ideal firm that you would like to own in your mind, and then move towards that. So for instance, if more flexibility and more freedom is a priority, then organize around that principle. If niching out your firm in order to be more successful in marketing is top priority, then do that and make a list of those issues and work your way through them. Active manage your client book. Oftentimes, as you said, most accountants are familiar with the expression Sally, same as last year, right? And so a lot of the time you get more of what you've been getting because it's what you've been getting, but there isn't really like a concerted drive to either organize around those things and make it your niche or to really go after what you want. And so same thing with training. It should be an ongoing thing. Learning should be the top priority, and I would say our firm's done a good job of putting learning at the top of the list for all of our team. And that's partly based on feedback from the team members, because we regularly ask them, like, what do you want out of your experience and what are you looking for? And that one, like more exposure to learning opportunities is usually right at the top of the list. And that creates a lot of engagement. Being participative, having meetings with your team and asking them what direction they think the company is going in and where they think the ball's heading. Getting buy-in from your team members goes a long way with retention. We talked a lot about transitioning to the cloud and so on. If they've gotten to participate in that process, as opposed to having it sort of foisted upon them, the uptake and success rate is infinitely higher.
Sure, Chris, thank you. Matt?
Yeah, so like a monthly capacity planning check, like these are the jobs kicking off this month, the assignment of who's getting what and how long it's going to take. That's always an important one. Deadline check, kickoff meetings, making sure the checklists are going out properly. And yeah, I think if the systems are just like, if there's a lot of automation built in there, the monthly check to make sure it's running right and people aren't ignoring the emails that it's sending. And yeah, it's kind of that like hybrid of automation and human elements. And yeah, you kind of got to pick up the phone every now and then and talk to a client if they're overwhelmed. One thing that kind of changed my thinking recently on this, like a lot of you have probably heard of ideal client profiles. this is the type of client we target and the value we provide. And that's great. We've been using those for a few years, and this idea of a user persona is something new to me. So like after they buy, how are they interacting with the services and our systems and all that? And that can be very different. And we have like an overwhelmed Olivia who like there's a lot of stuff thrown at her in a checklist, and she gets flustered, and she just needs a phone call to like simplify things. We just need your bank statements, your investment statements. Just start with that. Can you do that? Or there's a disciplined Danielle is another one. She's always on it. And if we're frustrating her process or asking for stuff that she's already provided, that can lead to friction. And so as we're just doing those, whether it's a year-end checklist, send it like we just did it yesterday for all our August 31st year ends. Trying to like, or having that identification of how are they interacting with us. And yeah, it can be different approaches we have like 3 of them. And yeah, sometimes a phone call or an in-person meeting is all it takes. And other people want all the information and instructions in a checklist. So yeah, I feel like that's a real human element on the client side. Once the stuff comes in, it's doing the work that everybody knows how to do.
Perfect. Thank you. So overarching, it's just a last question to everyone again as well. So I'm looking at purely coming from a personal experience. We always start planning early enough when it comes to upcoming work, not knowing we generally keep around 10%, 15% growth back in the days and say, if we grow above that, I'll be able to kind of manage it with the staff I have. So resource optimization, planning, all these things happen early. But I continue to see that there is a bigger challenge of information chaos. And people are getting bombarded with messages, with new apps coming in, and all this information. I think 4 years gone by and people still don't know much about us. We're still very early in the stages of people having an awareness that we exist, and we've spent so much time and effort in building a very comparable product. But so I continue to kind of wonder what goes on from a partner's perspective, and some of the folks on the audience as well. Is like, when do you really start to cut down the noise of information chaos and go to the root cause of it, and then find enough comfort that the direction that you're going is going to land you somewhere decent enough, because time in its sense is the only valuable commodity that we have today. So can you guys, maybe in the audience and otherwise, can you guys share your thoughts through either chat and then to the panelist? That would be great.
What you're describing partly can be described as shiny object syndrome, SOS, right? And so on the one hand, we want to stay on the cutting edge of technology, so we're always watching. But we think very carefully before we integrate something into our business processes. We do a lot of evaluation work. We'll do some testing and so on before we do a firm-wide rollout or before we do a client-wide rollout. We want to do some beta testing and some test cases and some use cases and so on. That this way you're not overwhelming your clients and your staff, because even the ones that are, and these are the people that I really watch, even the ones that are generally pretty good about liking new things and wanting the advantages that come with that, even they can get burnt out if, it's sort of like a, billing software of the month or a time management software of the quarter and these things, because every 5 minutes there's a new one, right? And so you have to think judiciously about the implementation time and the learning curve, bearing in mind that clients are not as connected with all of this as we are. And so we're obviously going to get intimately familiar with this, but simple things like new client portals, new functions that they can take, new CRMs and so on. It takes a good amount of thought and training time, and baking that into your processes is important, because otherwise you're going to find great new stuff, implement it, and people are still going to hate it.
We have our core apps like Carbon, Ignition, Zero, HubSpot, Tax Cycle. And one thing that was just driving our leaders, I guess, nuts is proposal renewals and like having to look at budget actuals over here and what was the last proposal over here in this system, and how much revenue are they doing? Are they growing? How many people do they have on staff, like for each client? And so one thing we've done is just bring the data from all those apps into our database, which is a cloud-based Microsoft Dataverse database, and structuring the data for each client in a right way that we can build forms, we can have dashboards, and it's just getting that consistency. So every client's onboarded the same way, and with these forms, it's a very self-service in a way, and we've kind of built it so a client can go into their profile, see what we have on file, like here's your address, your year end, all the other data points, shareholders, salary, dividends. And then they can, if there's anything in there that is wrong or they need to update, they can trigger a form and tell us what to update it with. So that is really like, the intention is to reduce the scavenger hunt, and knowing like our carbon work pieces connect to our SharePoint folders, and that document library is, we have that link in our database so we can populate an email template with it. Like, hey, year end is done. Here's your folder link. Check it out, download it. So just so, like, it's a lot of detail work and knowing like the handoffs and where a client needs to go to fulfill what we need from them. So yeah, there's a lot that goes into it, but consolidating that data, structuring it, having it fit in line in the processes you have, and having some automation in there. I think those three things: linear processes, structured data, automation, it's like the foundation to plug in AI and have it really be reliable. I think you don't want it hallucinating because it's reading unstructured data.
That's awesome. Kevin asked a question about Cone Proposals based out of UK. They're also working on developing a practice management system. So has anyone used Cone Proposals or heard about them? Cone Proposals. Kevin, maybe do you want to, have you used it? Do you want to maybe share a few thoughts?
Yeah, no, I just got connected with them, ironically, earlier this week for a demo of their software, and they're trying to compete against Go Proposal and Practice Ignition, or is it two proposals now? Yeah, it's a pretty good software from what I saw. Functionality wise, it's mostly comparable. They don't offer the multi-option proposals, but the pricing point is way more efficient. And they are working on developing that practice management tool. It's not available yet. They said they should be released later early next quarter, before the end of the year for sure. Anyway, I was quite impressed with it, and I'm currently using Ignition Proposals in Financial Sense as a practice management tool. But I'm just curious if anyone else has heard of them or been involved with them at all. So I haven't used them. I just signed up for their free trial to kind of test a few things out, but I was impressed.
Oh, that's awesome. Thank you for sharing that with everyone. Appreciate it. And then I think Tony and so Rajesh had some thoughts as well. That discussion with the clients, the data is not in the hands of the clients and cloud systems. So I think there must be some standards for these cloud-based companies so that there must be, should be a fair competition and improvements in services. I echo exactly. I think we are all living in the world where we're dealing with clients and team and the environment differently. So everybody has a different way that works really well for you, for everyone. So I think they're expected to be some level of communication where I've heard people saying QB works really well, but then others say Xero works really well, and I will never go to QB or vice versa, and so on and so forth. We're all going to have our things that works really well, whether it's the team, whether it's the support, whether it's the founder, whether it's vision, whether it's everything else that comes with it. So the expectation is that we should have more choices. I think we've lived in the world where we didn't have choices. Now the question is, we are living in a world where we have choices. How do we narrow it down to build that works really well for us? And I think that's a great starting point from our perspective. Tony had a question with Josh. Josh, if you're still around, it was the budgeted billing rate. Your budgeted billing rate is not going away, and it's going to be implemented by everyone. So can you please share some more details?
Yeah. I mean, it's not. I mean, if any client goes through our process, they get our budgeted hour spreadsheet. So basically, what we did is we want our firm to have a net operating margin of 15%. It's very different than the gross operating margin. So yeah, that's what our target net operating margin is. And so we work backwards for the average salary of each function. So you could take our average salary of the payroll team, work backwards, and come up with a rate that gives you that would ultimately get you to 15% net operating margin. Obviously, a lot of assumptions within that particular model, which I won't go into, in terms of what you're spending for fixed costs, right? Outside of that. But we basically come up with a particular rate. That rate, we increase it by 5% each year, or 5 to 7, depending on raises that we give to our team, right? So we adjust that particular rate on an annual basis so that we can continue to maintain that particular margin. We have a customer renewal process that's annual. So even though a customer signs up with a monthly billing, after a month we review their budgets, or after a year we review their budget with the new rates going forward. So have any of the hours changed? But look, there's a lot to talk about in terms of the budgeted hour model. But ultimately, like, just to go back to basics, all we do when we go through a process, you ask them in the value pricing model, you've got a whole discovery process when you're meant to ask a whole bunch of questions about that particular client's business. So if we just take the bookkeeping function, right? Okay, how many transactions do you have? How many bank accounts do you have? Do you have cryptocurrency? And so you can envision the type of questions that you would ask, and then we've built calculators that we use, and then we can then input that data that spits out an hour amount. But imagine, you just using your experience and go, oh, okay, 100 transactions, that would take, I don't know, 2 hours of time or something if you're matching transactions on an accrual basis. Or if it's a cash basis, it's going to take an hour of time, right? So that's where you get your budgeted hour, and that's going to be monthly. You could also ask them about a growth rate, but assuming that hour per month, or that number of transactions per month, let's say, is consistent over the next 12 months, then the budgeted hour for that particular customer would be 1 hour of bookkeeping time, and that would repeat for the next 12 months. And then a year later, we'd look back at and go, hey, has this bookkeeping engagement changed? Oh, it's not 100 transactions, it's 500. Okay, the budget for the following year is 5 hours, right? So what it does is, I think it creates a nice tension between customer and the firm, because we don't want to go to a customer and say, oh, geez, we have to increase your budget, because they might say no, right, for next year. And at the same time, the customer doesn't have to, they don't get to bear the cost of overages. Oh, this month was 2 hours. That's okay. We're not going to bill back 2 hours. We look for certain standard deviations. Let's say a number of months in the year, if we see we have budgeted hour reports that come out every month, so we can see budget to actuals. If something goes X amount of standard deviations over and above a budget for a client, then we look into it and say, what's up here? Is there a performance issue? Is there a training issue? Or ultimately, oh, geez, I know the client hired 50 people this month because they just got funding. And so now we actually have to relook at budget. So we do have a mechanism to look at the budget again throughout the year. But that's just a little sort of nugget, I guess, about the model.
Josh, do you share that? Like, you give the client that budget hour spreadsheet, like during onboarding or whatever, like, here's how we see this engagement going. Do you share the actuals with them as well, or only if there's a need to talk price increase?
No, we don't share actuals. We don't get into that discussion. Again, we're trying to look. The model isn't perfect, but we try to avoid the discussions that happen in the billable hour. Why did you spend X amount of time on Y, right? So if what we do for all new client engagements, we do a 4-month check-in to make sure that because at the end of the day, you're also trusting client. We don't get all their data, because that's just that would be a very intensive onboarding process. We take their word for it. And then at the 4-month mark, we go and look and say, okay, they said 100 transactions. Are there actual 100? No, there's 1,000. Okay, well, we need to rescope, right? But let's say more or less, if the data is corroborated at that 4-month process, then no, there's no reason to share the actuals with the customer. We just kind of continue. At the annual renewal, if we look at, oh, hours have gone up, rather than communicating to the client the hours have gone up, which no one likes to hear because then you're into this whole discussion again of why the hours have gone up. We just say, here are the functions, here are the reasons that the hours have changed. Number of transactions have changed, headcount has changed. So we always try to link it back to the data so it's not a discussion around time.
Mhm. Yeah, that makes sense. And it's, yeah, the way I look at the budgeted hours is like, here's our rate and our gross margin, and based on like we'll break even, we'll hit our 15% margin or whatever if we can do the work in this time. And then if you want to add some value added stuff on top of that in the price, like you have your floor price and then your actual price. And if you can make a little bit of margin there or like add some cushion in there, that's great. And the team knows like, yeah, they do that work in the budget hours. It means we're doing good. If they can do it faster, they can enjoy that time.
Yeah,
Chris?
maybe I'll just offer a brief comment, which is some people might have noticed that this is an AI themed webinar, and we haven't spent a lot of time talking about AI yet. Part of the reason that we're all very insistent on all these other things and passionate about them is things like systems, automation, processes, billing, marketing, they're all connected to each other. And if you want to start implementing AI tools, a lot of this other stuff has to be done first, essentially, right? It's a deterministic thing, right? Like if you have clients that are, let's say, still paper-based, the idea of implementing an AI tool is, well, there's about 3 or 4 steps in between those two things. And so, various companies and industries are at various levels of adoption, right? And so we're actually focusing kind of on all the different levels of adoption here to give people ideas about next steps and where you can go in order to get ready for a lot of these other AI tools, which can even further automate these tasks. And so if you want to take advantage of all those advantages that are really coming down the pipe shortly, then it's a good time to finish up all of this other stuff we've been talking about.
Yeah, thank you so much for that. Guys, this is, I echo every single thing you guys talked about. From an AI perspective, you'll see later, the number one action is cloud adoption. You can't really use AI in any form whatsoever sitting on any other systems, and it has to kind of fit nicely in all the other components. And it's a very, in my opinion, as an accountant for 15 years and maybe 4 years as an entrepreneur, it's a very misunderstood concept of what AI is actually doing and what capacity it's doing. There's a lot of chaos and information around outside. So we're hoping that at some point in time, we can narrow it down to what really applies to you. I think cloud adoption and cloud automation is way far ahead of the curve in terms of stability and anything else that comes with it than AI will be at this point. It's growing at a faster pace, and it definitely will make waves in so many ways, but it's no different than when we gave into the dot-com bubble. Let the bubble burst a little bit, and not every adoption or movement has to happen fast. If anybody, you were at ZeroCon, you probably heard about Sukhinder talking about it, that they are going to go slow on AI and building AI in a much deeper integrated manner rather than just giving a tool that does X, Y, and Z, which is what we're hoping to really bring it out and really summarize it later. But for now, I would like to thank each one of you guys. You absolutely provided a lot of value, so we appreciate it. I would love to have some of the audience giving some echoes and reactions, so at least they feel like, oh wow, this is what we did, this is how we did. I wanted, there you go, some hearts coming out. So this is a very, next time around, we make sure that we actually do it in person. Josh, Chris, Matt, thank you so much again for joining us.